Hi, welcome back to the channel. Today I want us to have a look at two giants in the electric vehicle industry. These are two names that, once you mention electric vehicle in the US, these are the two prominent, names that comes to mind. And one of them is actually the leading, and we all know that, Tesla. After Tesla, we are also going to talk about the GM, General Motors. The GM has also been, the GM stock price has been doing considerably well in the last couple of years, and GM has invested a lot into the electric vehicle. But as you may know, Tesla is still the leading, but on this day we are going to be looking at both of them, their total liability to free cash flow ratio. We want to see their balance sheet. We want to see why maybe we would see why the two stocks are different in stock price, why one of them is over $1,000 and the other one is just about $45 or so. But is it justified? Is Tesla stock price as high as that, or is it justified? Is there any valuation that you can do that will justify the stock price? We will have a look at that. Also, GM, what has GM been doing in the past? Where are they now? Where are they positioned? How are they invested in the business of electric vehicle so far? The exercise that we will do now is the total liability to free cash flow ratio. It is for us to see on the balance sheet their liquidity, their liability, and also their cash flow. We will check both of them. We want to see, which one of them, with the amount of cash in their account, will be able to pay their debt in the minimum years. As part of the rules for us to invest in in a business, to get a stock, we like stocks that that are liquid, that are able to pay back their total liability in not more than 4 years. So this exercise, we would see with their current balance sheet, their current cash in the free cash flow in their balance sheet, if they were asked to pay for their liability, how long will it take them? So this exercise will show it to us, will tell us how long it will take each of them, to pay whatever they are owing. So here is the information, fundamental information for Tesla. The Tesla price as at close of yesterday, 5th of April 2022, was $1,091. The market cap is 1.12 trillion, and the P ratio is 222.66. The EPS is $4.90. Tesla is not paying dividend at the moment. Let's have a look at its financials. The financials, starting with the income statement. 2018, Tesla slightly above 21 billion. 2019, 24 billion. 2020, 31. 2021, 53, and trailing 12 months is 53 billion 823 million. So you can see that Tesla has actually been growing in revenue. Total revenue is been growing. Obviously, cost of revenue is also growing as well. It's higher. So the gross profit here for trailing 12 months is slightly over 13 billion. Operating expense is over 7 billion. Operating income is slightly, 6.496. Let's have a look at the balance sheet where we can check the total liability. On the balance sheet here, as you can see, total asset from 29 to 34, 52. That shows you that it's also increasing. The liability here, total liability, is slightly over 31 billion. over 31 billion. And also total capitalization, common stock equity. Tesla is, I heard Tesla might be thinking of doing or about to do another stock split again, but let's have a look at its cash flow here. The cash flow from 2018, you can see slightly over 2 billion, over 2 billion. Here, there's a jump between 2019 and 2020, 5.9 billion, almost 6 billion. Here also, almost double here, 11.49 billion. And trailing 12 months, as you can see, here is negative, end cash position. Now let's have a look at its free cash flow. Free cash flow here is slightly over 3 billion in free cash flow. So if you look at this compared to their total liability, which is the exercise that we would carry out, I would put all this information on an Excel sheet, which the Excel sheet will now do the calculation. We'll see how long will it take them. Let's just have a look at its total liability again. The total liability on the balance sheet, total liability is 30, slightly over 31 billion. So let's have a look at GM. Then we'll now go on the Excel sheet. GM, the fundamentals for GM, the previous close is $43.18. The market cap is over 60 billion. So you compare this to Tesla. This is just uh, Tesla is over a trillion. So this is just slightly above 60 billion market cap. The P ratio is 6.18, and the EPS trailing 12 month is $6, 6.70. So it's not paying dividend as well at the moment as well. Let's have a look at its financial. Okay, here is the income statement 2018, slightly above 147 billion, 137, 122. This it came down. This is during the lockdown. Okay, and then 2021, 127 billion. The growth here is not it's not even up to there about 10% or so, trailing 12 months. You can see the cost of revenue is also higher, and the gross profit is just over 17 billion. Operating expense is also higher, 8.5. Net operating, this is negative. Other income expense, let's go on to the balance sheet. Let's see the balance sheet. On the balance sheet, you can see from 2018, sorry, on the balance sheet, my network is from 20 227, 228. You see, it's insignificant growth at all. 235, it's not. 2021, 244. That's the last one. Then the liability here is 178 billion. 178 billion. This is like half of the liability for Tesla, but in market cap, Tesla is like 4 times or even more, 10 times of GM. But this is the liability here, 178. They're about 188. Let's go on to the cash flow. Let's see if they're liquid. Let's see their free cash flow. You can begin to see the difference between Tesla and GM. Even though GM is doing all it can, investing and all that to be able to dethrone, as they say, dethrone Tesla. Whether that can happen, we don't know. Now you can see the cash flow. You have negative here. You have negative here. Yeah, it's meaningless having negative. But then let's see the free cash flow itself. The free cash flow is negative. So this is meaningful, negative, and the previous year is negative as well. So they have not been making. I mean, they've not been making money really. There's nothing to say that there's no free cash flow. No, I mean, you can even say that cash trap one way or the other. So let's let's go and have a look at the Excel sheet because I'm going to input all this information, the free cash flow information, this amount on the Excel sheet. Here is the Excel sheet. Yeah, I already put the P ratio, which is for Tesla 224 here. The market cap is 1.13 trillion. The stock price is 1,099. The P ratio for GM is slightly 6.18. The market cap is slightly over 60 billion, and the stock price is 41.38. Now, the total liability for Tesla is slightly above 31 billion, and their free cash flow, which, let's go back there, the free cash flow is 3.483 million, billion, you know. Now, let's have a look at that of Tesla again. This is for Tesla, and this is information that I copied just for you to see. Total liability for Tesla. This is it there, the total liability. This is the total liability. That's the amount. So let's look at that of GM. That of GM is here. I copied it from Yahoo Finance. Yahoo Finance has almost up to date. Yahoo Finance. Okay, this is the figure for um, total liability for GM 178,903. So we copy that, and you can see it here 178,903. So what it essentially means with this exercise is that if they were to pay their liability with the amount of cash flow they have in their account at as at this exercise, as at present, it will take Tesla almost 9 years. This is 8.9. It will take them about 9 years to pay their total liability, which is also high, excessive. But for GM, you couldn't even do it because it's negative. So you see here, if we're to use the negative, you were talking about minus 25 years, or so you can't even do it for GM. So you can see that Tesla, it's a better business, more viable than GM in terms of money, what they're making. Maybe I mean, we'll say deliveries and all that, because the more vehicle you can deliver, the more money you can make. So, but Tesla is leading, so now you can see, based on their balance sheet, Tesla is far way better. You are far way, guarantee a return if you invest in Tesla than on a GM. And but if you're going to do the full valuation for between the two of them, you will be looking at least you do a forecast for at least minimum 5 years or up to 10 years. Where you can have you can forecast that maybe the growth of Tesla could grow 20% or 30% year in year for the next. But we will do on another video. I will make another exercise that will do a full valuation. But with this total liability to free cash flow, this shows Tesla it's far better to invest than GM. Let's have a look at some other information here. Here, the EV investment. This is GM. GM 6.5 billion to create 4,000 jobs. Third, lithium battery plant, convert Orion, Michigan plant. This is talking about their investment. General Motors unveils 7 billion electric vehicle push. We are going to be number one mid-decade in EVs in the US, says GM CEO. GM to spend 6.6 billion on EV plant. Investment in bid to dethrone Tesla in electric car sales. This is a wish. Maybe their wish will come true. I don't know. But it's okay to wish and it's okay to dream. It's free. Put on put in the hard work. That's where the job is, not on the dream itself. Here is the GM technical chart. As you can see, we are currently trading. Today we are trading below 20-day moving average. The stock has been trending down, um, below 50-day moving average as well. Let's just draw the channel that I can see here. This stock has been trending down. You can see from the higher high here, then it dropped down higher low, lower high, lower low, lower high, lower high, lower low, lower high, lower low, and it started consolidating around there. He broke up this, he broke away from this channel on the upside. Then here, there's a gap up here, and the gap has been refilled back here. This is what I say about gap up. When there's a gap, the gap will be filled one way or the other. So the gap has been filled back here now. Also, you can see here is actually coincides with the it is below 20-day moving average, and 20-day moving average is serving as resistance here, but it also sitting on currently sitting on support here. Yes. Let's have a look at the weekly chart. On the weekly chart, we can see that we are sitting on the 200-day moving average as support. It is serving as support here. Yeah, the 200-day moving average is serving as support. We are trading below 20-day and 50-day moving average. Also, there's another level of resistance on support here. As you can see, we have another layer up here. We have another layer up here. So as you can see, um, we're trading here, and there was a huge anchor candle to the upside. Then it was trading within this channel. Then the next thing came down, back up, broke up the resistance on the upside, then back down again, broke this support here. Now the support is holding for on a weekly chart. And as you can see, the highest it has been the historical highest. It's 67. The 52-week high is also 67, so that's the historical high. And then let's go back to daily chart. On the daily chart, as you can see, there are quite a number of layers of support and resistance that we can actually draw, but it is insignificant because we are not currently there at the moment. See, but then let's have a look at Tesla. Here is Tesla. As we can see, Tesla is trading above 200-day, 20-day, and 50-day moving average. Tesla is bullish. I've said it a number of times on this channel. When you have a gap up, that gap has to be filled. There's a gap up between here. Now, this is where we are now. This gap has to be filled. So if you're still looking to buy Tesla to add Tesla to your portfolio, you might exercise some patience because this gap has to be filled and is around 1,000, 1,016. So we might still have some uh, downward to come on Tesla, but then um, Tesla is sitting on a support here on a support there. It has broken this support before, it came back down, then is broke it again. Now it broke it on the upside, which is a resistance. Now it's acting as support here now. Support turn resistance, resistance turns support. That happens a lot. Here is another level of support on the Tesla. Let's go on to the weekly chart.
weekly chart for Tesla. As you can see, we are the same support or resistance is here, is holding here as a support. Tesla is currently bullish. We are trading above 220-day and 50-day moving average, but you can still have it there. The say Tesla is actually consolidating or trading within this small channel here on a weekly chart. Guys, be careful.
We have seen the outcome of the total liability to free cash flow ratio. Now we know the amount of years that will take each of them to pay their liability if they were asked to pay with the current cash in their account. We have also analyzed technically price action. We've seen, the direction of the technical chart. Please do not just add any of this stock to your portfolio just because you watch a program on YouTube. Make sure these stocks are good for your portfolio and make sure you do your own valuation. Thank you for watching this channel. Please call again.